So today we are going to have another detailed session of OR. It's a very interesting one. Some of the people have asked me how to do exit strategy and all. This comes with practice. It's see, trading is half art, half science. You can't say that it's fully science. It's half art, half science. You have to learn. It is not that we have been giving the despite we are not getting some signals. We want to give you OR daily, because you should not stop practicing. Some of the people have stopped practicing for 3 days or 4 days. That's very bad. This is a starting stage. You have to continuously practice. Whatever work you may have, you have to start it. So I'll tell you one Schwartz, a man who Schwartz was won several prizes. He made 10x every year for 9 years. If you don't believe it, you can just check in the Google Uncle. You can go and ask Google Uncle. He has written a book called Pitbull, P-I-T-B-U-L-L, Pitbull. So 9 years he has held a record of 10x. So he has made from $400-500 to $20 million. That's his record. So his name is Schwartz. So you can just check it. Pitbull is the name of the book. So it is not difficult. Of course, you have to have organization. That's the most important thing. It's not difficult for you to make 10x. If people ask me whether you can make 10x, yes, provided you be treated as a business. That's what we said in the beginning. Treat it as a business. What is a business? We will discuss it in the today's sessions. So if you don't know how to do a business, then you have to go for a work and then be as a slave. Unfortunately, you have to be a slave. So especially this COVID time, all IT organizations will treat you as a slave. You get up at 10 o'clock and sleep only at 12 o'clock, midnight. Maybe afternoons, some of the people are very lucky to have afternoon nap about half an hour or 1 hour. But generally, you close your deal only at 12 o'clock, because you have to attend your US customers, you have to attend your UK customers and whatnot. No? So that's a problem. So it all depends on you, whether you want to be a slave or your own boss. But if you have to be boss, you have to have some kind of a skill for that. Skill set you have to get in. We will discuss about it later. Now I'll take a small, because people wanted exit strategy. This is blindly an intraday exit strategy. Anyway, we'll discuss about that also, so that you learn a lot of things over a period of time. So we have come to the end of the session. Learning session is concerned. We are just going to the end of the session. You have won already. So what is it? We'll see VWAP. What is it? How to use it? We are going to take an example and then check it out. We are going to, again, we have already discussed about the importance of stop loss in the first session. Once again, we are going to do the importance of stop loss with your experience. As you gain experience, you will also learn faster certain things. You can understand certain things. Some of the things you will not be able to understand when you are not experiencing it. But once you experience it, you can easily understand certain things. The OR experience sharing, that is with you and me, we are going to discuss. We are going to discuss with each other so that we can sharpen our skills. So it doesn't mean that we are going to stop with this video. Don't think that this is an ending statement. We are going to stop with this video. We'll continue giving you over a period of time. We'll continue educating you. You will improve your skills. We will make you as a boss. This is a one-side thing. So other side is you have to take it and then go to the next level. That's the most important thing, is you have to take it and go to the next level. We are here always to help you out at any given point of time. Now, what is VWAP? VWAP. It's called as a VWAP. So what does it mean? VWAP, a very interesting one. VWAP is volume weighted average price. That's an acronym. VWAP, VWAP, volume weighted acronym page. Measures the average price that a stock traded at over the course of a day when accounting for both trading volume and price. Now, it's nothing very difficult. Now, supposing you have bought 100 shares at 67, 100 shares at 68, 100 shares at 69, you may say that, okay, add the 3 and then divide it by 3. But then let's say that you have bought 100 shares at 67, 200 shares at 68, 300 shares at 69. Then what you have to do, you have to multiply the volume with the price and then divide it by the entire quantity. You will get the average price. This is what it is. The same way, volume weighted average price is, VWAP is sum of value traded divided by sum of volume traded. Value traded divided by volume traded. That's it. The interval is, you can take it 5 minutes, 10 minutes, 15 minutes, or 1 day, whatever it is, but it is strictly used as a day exit strategy. You have to understand it is only for day trading. But still, you will know when the momentum is going. Now, let's say that a stock trades at 100 shares. You can see, even say 1 lakh, but generally, to take a simple example, I've taken it's 100. The price is 25 and it is 2,500. The next minute it changes, trades 200 shares, 26, 5,200 is the total value of it. 25 into 100 is 2,500, 200 into 26 is 5,200. The next minute it trades 300 shares, 27. It means the total value is 8,100. You add all the value and then all the stock volume, then divide it. That's it. 15,800 divided by 600 will give you VWAP. That's it's very simple. 26.33. Now you may think that 25, 26, 27. So 26 is the average price. No, it is 26.33. Why it is used? The most important thing is big sharks will come and buy at different prices. You know the value of the stocks. At what price they are buying it, you will easily know. The average will give you exactly what price they are buying it at. So the most importantly, they will not allow the stock to go down below this price. Generally, if you take a stock like Reliance or TCS or high volume traded stocks, I'm talking about high volume traded stocks. Are you sharing the screen? Srinivas is telling. Okay, you have to go out and then come, Srinivas. Probably there is an internet problem with you. If the problem is for everybody, then all will complain. You have to understand that. So nothing will go off. Don't worry, you can go out and come back. So the most important thing is the VWAP informs where the big sharks are buying. Because you will not know exactly, the stock may trade from 1,700 to 1,750. You don't know what is the price. Probably you will check the average price and do it. No, it's not like that. It may be at 1,740. When it is between 1,750 to 800, it may be near the 1,800. We don't know. The VWAP is also given in the trading terminal. But then, luckily, if you're having a advanced trading terminal like Zerodha, it gives a VWAP. It gives a VWAP every second to every tick to every minute and everything. So generally, as I tell you, that you check it in every 5 minutes chart. At least 5 minute chart is more valuable than seeing it in a tick chart or in a 1 minute chart. So this is how you have to see that VWAP will give you the price at which the sharks are buying, the average price. So that will clearly tell you the momentum of the stock, where these people are buying it. Now I'll take it with an example and see that. How to use the VWAP also we have to see. It's a benchmark price by the traders for ORB trading, opening range trading. If the price is more than VWAP, you have to do your entry. The price is less than VWAP, you have to do an exit. This is only for intraday trading. Okay, you learn it, and that's not a problem. So you will know where the price is falling. People are finding it, oh my God, where I have to do that. This is a half science or half art. So learn this. That's not a problem. Learn it. Support and resistance level, it gives you a support and resistance level, also intraday support and intraday resistance, because you will not know where is the intraday support and intraday resistance. VWAP will tell you where the support and where the resistance is as far as the day is concerned, that day is concerned. It doesn't bother about the rest of the days, or it doesn't bother about the futuristic, the overall screen. It only bothers about the daily support and resistance. Understand the market efficiency as far as that day is concerned. Don't confuse it with the market efficiency with the general market efficiency. As far as that day is concerned, because there may be some kind of a news floating in the stock, or some kind of information which we don't know. It's an internal information that the sharks will know it, and they will buy it happily to sell it in the same day, or maybe carry forward to the next day. We don't know exactly what they're doing. So this VWAP will help us to understand, to digest the information. With this tool, we can easily find out. We can also know the internal information. We may not know the information, but we will know, okay, some information is there, and that's why these bloody fools are buying it. So you can also participate and then profit from this game. Now I will take it with an example. This is the purpose of that. The limitation of VWAP, as I told you, it's an intraday tool. applicable only for intraday trading. And the VWAP cannot account for historical trading information. This can lead to particularly misleading results if a stock is trading against its prior averages. So you don't have to worry about the future or the past of that. It's only for intraday game. The VWAP will not reflect a stock that has been steadily rising for several days, nor can it reflect an asset in a free fall. It can only show how a stock has performed over the course of single days trading, absent any and all context. Yeah, as I told you that there is an information. There is an information which we want. We crave for the information. Google information. Google uncle cannot give you the information. If he gives the information, they can't trade. So that's the main thing. So you may think that Google uncle is the best one. Mata Pita, Google, Guru, Google, you'll tell. But then Google will not give you all the information. That's the problem. Because Google will suppress some information. So, but VWAP will give you all kind of information. This is a crystal clear information. But you may not know the information, but you know, okay, something is happening in the stock, so I can make a profit out of it. I will take it with an example. We'll see how it can be done. This is what the SMA is doing. This is the intraday SMA. It's a 3-minute intraday SMA. But with the SMA, can you trade it? It's just embracing the price. This is a price, 5 minutes chart. I think it's a 5 minutes chart. 10:45, 11. No, it's a 15 minutes chart. It's embracing the SMA. Just goes along with the price. It's like a husband and wife. It just follows. You don't have any useful information on that. Where to buy, when to sell. You clearly don't know. Exactly, you can see that you don't have any kind of information at all. Now I'm just introducing the red line is a VWAP. It clearly shows where the stock has broken out. Where the stock is broken out, you can see that. You have to check for the stock with a volume breakout. That's the most important thing. You should not say only the price. You have to see the volume. See the stock with the volume breakout is a very interesting and information kit. Even for your regular thing, you can buy ORB if the stock volume is higher than the usual one. You see that this is a 15 minutes chart. You can also take a 5 minute chart, but don't take a tick chart or a 1 minute chart. This is, for me, I'm a longer period holder, but not like others. So I take a longer period. So that's why I'm using 15 minutes. Maybe you can take a 5 minute chart. But even there, you have to see the volume also. So war breakout with the lesser volume is not desirable. So this is a very secret one. War volume with a lesser breakout is definitely not disabled. So you have to check when the ORB is going above the average, usual average, then it's a wonderful information for you to trade on the equity. So you can see that at 1 o'clock, this is what Reliance at 1 o'clock. 1 to 1:15, it logged a huge volume. And then it went on to that. From 1,845, you could have easily got it at 1,845 or 50 also. There it has gone to 1,880. 30 rupees is a very, very big price, especially in an intraday thing. That is easily about 1.5%. It could be 2% because people for an intraday don't see that 15 minutes chart. They'll see only the 5 minutes chart or even lesser time frame. So this is how it is. You can see that how the ORB line also it was along with the SMA VWAP. Immediately then it has gone up. You can see that once it broke out, it gone up significantly higher. And it did not stop with a straight line. It just went up slowly and steadily towards the end also. Did never experience any sell-off. I think this is yesterday's, this is Friday's chart. So any question on that? You can see that. Okay, we will have a session, a question session a little later. Now I'll take another example. This is a TCS, SMA and VWAP. You can see that SMA is of no use. You don't know when to buy or when to sell. It'll go along with the price only. You really don't have any kind of information. See this VWAP. Say it went up and then it came VWAP acted as a resistance. You can see twice it has acted as a thrice it has acted as a resistance. This is the next one. Yeah, these two red line and the previous one at around 12:15 it acted as a resistance. 12:15 it acted as a resistance. Yes, 12:15 it acted as a resistance. And then at that time, if you would have bought it, it's around 2210, maybe 2210, and then it has gone up to 235. That's a wonderful price. At least you could have got it 2225. So 2210 to 2225 is a 15 rupees, maybe 0.5%. Good for the people of intraday because they don't invest anything. They trade with 10x available fund. So usually your broker gives you 10x, and if you're influential enough, he will give you 20x also. But it is dangerous, so don't do that. Just telling you the intraday player, how the intraday plays. This is a clear indication of how you can use this VWAP. And you can see that after the breakout, it has gone up and then it stayed there. It stayed there. VWAP. I'm talking about the VWAP, red line. It stayed there. There is a constant buying from that level. Slight gradient is there. It may be about 2 degrees gradient is there, but not like Reliance. So there is a big information in the Reliance, and there is a small information in TCS. This I think is a Thursday chart, and no, this is actually a Friday chart. So after it went down after the results, and then again it got the institutional investors have bought it. You could see that at 12:45 they have also bought it with a good volume. Till 9:30 to 12:15 there was no kind of buying happened, and at 12:30 it went up with the volume. That's the most important thing. You have to see the volume. Volume chart is most important. Now I think one more example is there. I will just check it up. If there is, yes, cuts, yes.
I was 15 years old.
Yeah. I think you have to mute everybody. That's it. Fine. Now we'll see that with the exit strategy, how it is happening. Now, yes, cuts. You can see that it has broken out at around morning itself. It has broken out 9:45. Then you can see that when it came down, it did not come with a volume. So this information is a good one. So it did not come with a volume. It did not come with a volume. You can say fantastic. I'm very confident. As long as OR low is not hit, I'm very confident. You will be very confident now. What you can do is, once again, it went up at around 1:30. The big fish has come at 1:30, and then at even at 2 o'clock, it came down, but did not bother you much because the volume is less. So you are not confused. And again, at 2:15, the volume is higher. You know very well that there are some big fishes who are buying it, and then it went up straight away down there. So you have to sell it when it comes down below this with the volume. You have to understand that when it breaks ORB, it acts as, for an intraday, it acts as a selling signal, but it has to come down with the volume. It has to come down with the volume. With a smaller volume, you know that, okay, fine, these people are playing with it. They are trying to snatch away my positions. And usually the intraday player is much more intelligent. He doesn't give it off so easily, but he keeps the stop loss at ORB level, breakout level, or I'm sorry, he keeps it at the OR low level, and then rides through the throughout the day, sells it around 300, 315 or 320. Since the volume was increasing 245 to 3 to 315, it was increasing. It was sold at the end moment, maybe at 1140, from 1120 to 1140 or 1125 to 1140. Wonderful profits as far as the day trader is concerned. He made about more than 1.15%. If you make 1% daily, it's a very huge profit. You can easily even beat Warren Buffett in 6-7 years with a small investment of about 5 to 10 lakhs. So you have seen that Mukesh Ambani has overtaken Warren Buffett, but of course Warren Buffett has come with a different kind of different principles he had, and Mukesh Ambani, you know, is Ambani. So we'll not discuss about Ambani. And this is how it is. You can use it. The very interesting one. And here, yes, you asked about how to sell it, how to use it as a selling technique. Here you can see that it went above the VWAP, and then slowly you could see that it never sustained above it. And then the volume was high at 10:30. You can see that the volume started high and it went down. You can see that the ORB also, the VWAP also is declining, slowly declining, and there is no point. At any given point of time, it was not at all increasing. It was slowly going down, and you know that at 3 o'clock it was very high. The volume is very high, clearly indicated that it's a sell signal for HDFC as far as the intraday is concerned. And if you have sold it, it's for intraday. Don't do that. If you have sold it, again, you would have got a wonderful profit. As I told you, that it's a tool for buying and selling. If it breaks down with the volume, you have to sell it. So you practice this, you will come to know about it later. Now we'll take a importance of stop loss. Of course, this is the most important thing. I have been telling you over a period of time, several times I have discussed about the importance of stop loss, but people are not obeying it. We'll see that with an example, what happens when you are not obeying your stop loss order. If you can't take a small loss, sooner or later, you will take the mother of all losses. Sequota says. It's a very great trader. He's not an ordinary trader. He's a very, very great trader. He has also made millions of money. And we'll take it. If you can't take a small loss, let's say that you have bought FDC. I'll assume that you have bought a FDC. You're not selling at 280 rupees. Your ego or your ignorance or whatever it may be, you think that it's a hope. Okay, that's a good stock. So I will not take a stop loss. I will not go by the stop loss. What happens then? It comes to 238 in a matter of 5 days, 6 days. That's what happens. So you should not worry about the losses. I know some people who are in Hyderabad are doing that, or in Visakhapatnam are not using this. See, if your money is very small, the objective of ORB or a stop loss is if your money is small, you are big short, okay, fine, not bothered. But when you're a small player, maybe you are investing 5 lakh or 10 lakh or 15 lakh, you have to be very careful. You have to micromanage your capital very well. So you can't take, say, loss of about 12-15% and then sleep with that. Then say, okay, when the time comes, I'll sell it, because you are both blocking your money as well as you are not obeying the orders of, you're also losing the opportunities which will come through. Now let's see that one by one. What does it say? OR is a short-term trading technique. Using stop loss is a mandatory one. Your ego should not allow you to go along without executing the stop loss. Your ego, you have to say, punch your ego and say, okay, I know, I will do that. It may be a loss. That's okay, I'll take it. See, the most important thing is why people are losing money. 85% of the people or 90% of the people are losing money because people can be with the loss for several days, but people cannot be with the profits for several minutes. That's a usual thing. So you have to change that psychology. You have to reprogram your brain in such a way that, okay, I'll take the loss. When it is profit, I'll go along with it. When it is loss, I will take it. I don't have any ego about that. I will not see the hope. I don't want to see the futuristic loss, huge loss. I'll take it. Let me take. That's a small thing I'm going to lose. I can use some other opportunity to make a big one. You have to tell it and then take a loss immediately. What is a short-term trading strategy? So that's the most important thing. That's a guideline to set stop loss. You have to have guidelines to set the stop loss. On a breakout day, set a stop loss at OR low price. After the day of breakout, set the stop loss, shift it to entry price, and then go through that. Or there are using a trailing stop loss to limit your losses. Use your trail loss to limit your losses or to protect your profits. Set stop loss based on the RSI trend. You can also set your stop loss based on the RSI trend, and also use a long-term trend lines to do that stop loss lines things. You can learn it. Gap up on the last time we have discussed about the gap up on the daily chart. Use the high of the gap up to use it. Limit the losses but not the profits. Always trade based on the risk reward range of 1:3. When you get 1:3, you have to put the stop loss at 1 and then try to get 3. See, supposing your 1% is loss, you have to say that I'll take it to 3% minimum. So you have to cut the losses early. You have to let the profits run. So if your loss is 1%, you have to run it at least 3% for your profits. So let's assume that you are taking a loss in HDFC. It should be 1.5%. But in Reliance, it should be 5%. So then it compensates for your losses. So even if you trade, let's say that you're making a loss in 3 trades and 3 trades are win, still you will be with profits. 4 trades loss, 2 trades win, still you will make it losses. But now see, 1 trade loss and 6 trades profit. If you are not going to adhere to the stop losses, all your 6 trades will lead to you need finish off all the 6 profits immediately with 1 loss. I'll take it with an example again. I'll go to the next one. Investing versus trading. This is the most important thing. Not following the trading routes. Example is FDC. So it is not only for the people with Visakhapatnam or with Hyderabad. I'm just giving an example. Value investors will buy FDC between 150 to 162.5. You know how they do it? They see the 3-year low and then put some kind of a 20% here and there. Then they buy it with 150 to 164.5 using the intrinsic value, using the asset and liability value or whatever it is. They do it. We are not bothered about that. We are only with the trading. The price range provides the margin of safety. They say that, okay, it's a margin of safety for me so that I can ride that thing. If at all it gives me losses, it will not give me huge losses. But if it's going to, the future, if it's going to run through, I'll make a big profits. So that's what they say. There's a price, it gives a cushion for the buying price. It gives a margin of safety. But then what is the margin of the safety for the traders? Traders will buy at any price, maybe 280, 300, 350, 400, 500, 600. They can buy at any time as long as they have a proper stop loss. The most important is stop loss provides them margin of safety. This is the most important thing you have to understand. You have to be clear with your analysis. You have to be clear with the studies. You have to be clear with the theory. The stop loss provides a margin of safety for trader. The stop loss, for the value investor, the entry price gives them the margin of safety. For the traders, they can do any entry price. They can do not at all a problem because their profits are less. They can do, but the stop loss is the margin of safety for them. If you don't obey the stop loss, what will happen? We'll see that. Amateur traders bought at 280 or 85 and not executed stop loss, keeping it as an investment with a loss of 15%. What will happen now? What will happen? You have to again climb through 30% or 25% or 22% to cover the stop loss, which is a Herculean stop. How many days you're going to lose? How many days? How many opportunities you're going to lose? Your money is blocked here. Your capital is blocked. Your losses will give you pain and the sleeps. You may say, okay, fine, I can run through it, but that's not the way. You have to cut your losses fast. Okay, now you are in the learning stage, but this example should give you an idea of why you have to cut your losses. See, 15%, it may be a good stock. I'm not bothered. It's FDC or any kind of a stock. It's not a problem. Traders doesn't bother about the rest of the things. He's not bothered about the quality of the stock. He's not bothered about the number of players in the stock, or he's not bothered about the promoters trading, or he's not bothered about the results. He comes with a clear head. Okay, this is giving a breakout. I'm buying it. I have a margin of safety at this such and such a price, and I'll rate it to 1:3 is the clear thing. That's what they see. So all kind of the rest of the things, they are not bothered. They'll ride through 5%, 10%, 15% also. We have seen that we get 15% in 5, 6, 7, 10 days. That's more than enough. So you should not be an amateur trader. So you have to cut your losses fast. You have to cut it at the ORB levels, ORB low levels. You can't keep it as an investment. You will be losing a lot of opportunities. You are blocking the capital. You are running a bigger loss. That means it gives you a lot of problems at the end. You can't sleep. Let's say that today you are having 100 or 200 or 300 shares or 500 shares. Tomorrow, if you're going to buy, let's say that you're running a 1:10 times. Thrice you are doing it. 5 lakh becomes 50 lakh, 50 lakh becomes 5 crore. Now let's say that you're putting 10,000 shares. What will happen to that? What will happen to your loss? You just calculate it. So you can't. Opportunities will come. It's like a bus. For a trader, opportunities come n number of times. It is like a bus. If you miss one bus, another bus will come. If you miss another bus will come. So you can just ride it through. But you can't allow the losses to climb up. You can't mounting losses. You should not be allowing it to climb. This is the most important lesson you have learned it today. No problem. You are still in the training stage. You can always do well the later stage. Trading is to grow your money faster. Investing it will go slowly, but trading is you have to make your money faster. You are blocking your money and restricting your growth by not executing the stop loss. So you should not permit your ego. You should not permit your ignorance to not to execute the stop loss. So you have to put compulsory stop loss. If you are a big trader, you have to compulsorily, you should say, okay, that's a loss. You have to accept with grace. Loss is a loss after all. It's a small loss. You should not make it as a big loss. 1% loss, you are making it as 15% loss. That's how amateur we are. We have to understand that. So we have come to the end of this session, I think. Yeah, that's a fantastic thing. If you can't take a small loss, sooner or later, you'll take mother of all losses. That's Etsekata's. That quote should be imprinted in your mind. I think we have come to the end of the session. What is the Buddha is telling? Learning from your mistake is a bad thing. Why? Because you don't require one life, you require 3 lives to learn from your mistake. Learning from others' experience is a better thing, definitely, a fantastic. Learn from others' mistake. It's an excellent thing. Nothing like that. Because you require only one life to learn from your mistake. Not learning from your own mistake is the worst thing. So if you are not going to learn from your mistake, you may require 5, 6 lives to understand what is your mistake. And then finally, learning from your mentor is the best thing. So that's why I tell you clearly, these are the mistakes you should not make. So you can finish off all your learning session in maybe 3 months, 6 months, 1 year, and the rest of the time you can enjoy your profits. So this is the best thing to have. So this is the Buddha gives me. Learning from your mistake is a bad thing. You have to always improve. Learning from others is a better thing. Learning from your mentor is the best thing, but not learning from your mistake is the worst thing. So understand this. This is the basic of this. The core information which I want to give you is in the last slide. This is the most important thing. Okay, we'll go to the next one. When it comes to mastering a skill, right practice is the magic ingredient to develop your profits. The right practice is most important thing. As I told you again and again, stop loss is one of the right things. So practice is not a magic ingredient. Right practice is the most important thing. So you have to understand that. And let's conclude with this. Have a great day and have a great weekend. Let's again come back next week with new videos and new information. Thank you.
Thank you, sir.
Have a great day.
Thank you, sir.
Thank you, sir.
Thank
Bye.
you. Thank you very much. Thank you.